David Daoud of Compliance Standards. Today is the 18th of November 2025, and as you know, shares in major hardware makers plummeted yesterday, Monday, after Morgan Stanley issued sweeping downgrades, striking Dell with a rare double cut and pulling downhill at Packard Enterprise. Now, the sell-off, as you know, extended to other notable firms like HP Inc., Asus Tech, Bigatron, Gigabyte, and Lenovo, as investors reacted to reductions in analyst ratings and growing concerns around profitability. Morgan Stanley analysts argued that the surging costs for DRAM and for NAND memory chips, driven essentially by intense demand for the data center and for AI infrastructure markets, are now squeezing margins across the entire sector. Samsung's recent 60% hike in memory chip prices shows a supply environment where fulfillment rates for memory could drop below 40% over the coming quarters, making life very difficult for PC and server makers and for their downstream partners. Now, Dell, with its historical exposure to memory cost cycles, could see its gross margin essentially contract further, and that's echoing sort of the past cycles where rising memory costs led entire segments of the hardware industry to lower their earnings and falling valuations. Now, these pressures reverberate for IT asset disposition players as well in many ways. There is certainly the potential for a higher immediate value in memory-rich assets, prompting ITADs to, well, sharpen their component harvesting and resale operations just to keep pace. At the same time, companies under cost stress may decommission equipment more rapidly or sell older gear to optimize for the new financial reality, creating a windows of opportunity for asset intake. Dynamic secondary markets and volatile pricing demand that ITADs manage risk astutely remain agile with both pricing and contract negotiations and seek new ways essentially to provide enterprise clients both service value and strategic advice. The business case grows for innovation and market intelligence in the ITAD sector, with margins likely to remain under pressure across the technology hardware supply chain through most likely the entire year 2026.